Our hog marketing analyst this week is Ron Plain from the University of Missouri. We talked with Ron on Tuesday afternoon as markets shut down for the July 4th holiday. As dry conditions continue to fuel grain markets, we asked Ron about consumer demand, increasing input costs, and how hog prices can keep up.
June was a pretty good month for hog producers. Prices moved up dramatically. We had a pretty disappointing April and May, but strong prices in June. We got carcass prices above $1 a pound for several days, so yes, a very good month.
With what we're seeing though in those grain markets, Ron, how good do hog prices have to be?
I'm afraid a lot better than they're going to be. With corn prices, the way the futures market's set up now, we're probably going to need close to 70 cents a pound on a live weight basis. That's up above $1 a pound on a carcass weight basis to cover cost of production. So high-priced corn and high-priced soybean meal is going to make it tough for break-evens on hog farms.
And are we looking at that not even this year, but also into 2013?
Absolutely. Here in early July, we've got the July 2012 corn futures contract above $7. Looks like we may have to wait till the fall harvest of 2013 to get below $6. So we're going to see a lot of break-evens in the 65 to 70 cents a pound live range for hogs, and I'm afraid not all that many days with hog prices that high.
And is that on both sides of the cut there, Ron, for the producer and the packer?
Yes. For packers, hog numbers are going to stay fairly tight, and packer margins are likely to remain tight also. The one thing that is kind of going well for packers is we're exporting a lot of the product. Close to 25% of the pork we're producing is getting exported, and usually packer margins are a little bit better on the exported product than on domestic sales.
You look for those exports, those strong exports, to continue?
Well, to some of the foreign buyers, yes. Mexico, Canada, Japan probably going to continue to be strong buyers. We put a lot of pork into China in the second half of 2011. Looks like their hog numbers are up and they're likely to slow down their purchases. Also, South Korea is probably going to buy a little bit less pork in the second half of this year than they bought in the second half of last year.
For a long time, we were looking at numbers to see if there would be any expansion, and the numbers have been small. With what we're seeing in grain prices and a short corn crop, which could possibly come if there's no rain over most of the corn belt in Midwest, is there any threat that there's going to be contraction now?
Well, there might be, Jeff. USDA's June hog and pig report indicated farrowings in the next 6 months might be down a little bit over 1%. It's not growth there, and that survey was taken in early June. Things have only gotten worse for hog producers, so if the drought continues to spread and corn prices continue to move high, we're going to have pressure on producers to cut back on the breeding herd.
What are you looking at as we go forward in consumption? We're at the July 4th holiday, and beef is going to be tight as well. So how do you see that battle playing out?
Yeah, well, fortunately for hog producers, record high beef prices is likely to continue to make pork look like a bargain in the meat case. Seasonally, we tend to see hog weights decline with the hot weather. That helps boost hog prices also and pork prices. Bacon does real well during late summer once we get into BLT season. So pork demand, I'm hoping, will continue strong. The other thing is gasoline prices are falling. That's also usually good news for pork demand.
And quickly, Ron, in slaughter weights and slaughter numbers, what are we seeing there?
Well, hog slaughter during June dropped down close to year-ago levels. At times was a bit below. The mild winter and early spring, we probably moved some of those hogs to town a little bit sooner. Growth rates were very good in early spring. But with this kind of hot weather, pigs aren't going to eat very much. They're not going to grow fast. We're going to slow down sales. USDA indicates that July and August hog slaughter could be up 1% or so, but that's a pretty modest increase. We're going to see a fairly tight supply of pork, I think, for the rest of the summer.